Hey everybody, Economic Ninja here. I hope you're doing well. I am here with a friend of mine. I can say a friend now. We've been spending a lot of time together, a lot of time on the phone, and I really appreciate him. Andy from Miles Franklin. How are you doing, Andy?
I'm doing really good, brother. It's great to see you, Travis. It's been too long. Thanks
I
for
know it has been. It's been like a whole 3 or 4 weeks where I screwed up the last interview.
Seems like a lot longer, man.
Dude, but yeah, I screwed up the audio, so hopefully that doesn't happen again. I want to talk about precious metals, how they are down. We're seeing an epic sell-off. I'm going to share the screen real quick just to give people an idea. Oh, I can't do it right now. It doesn't work. See, I'm having little audio issues. What is going on? Let's put it this way. The Dow Jones is down right now over 1,100 points. We're seeing all the indices selling off. Precious metals, paper, gold and silver is selling off. This is on the heels of what's happening with Target and Walmart's abysmal store earnings. So let's talk about that and talk about what happens with paper, gold, and silver sell-offs like we saw, what I believe is what's happening 6 months prior to Lehman Brothers collapsing.
Yeah, I think there's always the popular narrative that it's a rush to liquidity, that people are meeting margin call requirements, and gold and silver are incredibly liquid. So you throw out the baby with the bathwater. And but if you look at it really closely, you got the S&P in bear market territory down over 20% for the year. You got the Nasdaq down over 30% for the year. The Russell 2000, which is a better indication of the broad market or the economy, as the big companies are stripped out of there, down over 30%. The Dow down close to 20, almost in that bear market territory. And what's gold doing? It's flat. It hasn't really done much of anything. It might be up 5 or down 5, but it's flat. It's holding its own. It's doing what it's supposed to. Because you know what? In my opinion, man, in a market like we see now, he or she who loses least wins. And I think that's kind of what gold is supposed to do. It's not to make you wealthy, but it's supposed to retain your purchasing power in an environment where things are dropping underneath you.
Now, that is pretty hard I bet for people to hear that term, he who loses the least wins, because it is true. If you lose less money than your neighbor and then you have money left to be able to buy up goods and services, yeah, when they're cheap, that's true. But let's talk about 2008 specifically. I remember 6 months prior to Lehman collapsing, we had Bear Stearns going under. We saw the price of paper, gold, and silver start to sell off alongside of the stock market. They started to trend down from their highs until finally we saw that immediate rush to liquidity in mid-July, August, prior to Lehman collapsing. But gold and silver did something different. They bottomed around October, November of 2008, whereas the stock market kept selling off. Let's talk about that. What was it like back then in the industry when that paper was selling off, but you were trying to sell coins?
It was the most frightening time of my career, man. It truly was, because I'll never forget that. I remember laying in bed in the middle of the night with my wife saying, what the hell are we going to do? We're going out of business. Because as the price of gold fell from 1,000 to 700 and silver from 21 to 9, you would think that everyone was dumping everything they had onto the market, as gold fell by 35% and silver by 60%. But in reality, what had happened is that it was all a paper drive-by shooting, as every single mint on the planet or refinery on the planet within a matter of days was sold out of product. The US mint, the Canadian mint, the South African, Australian, Austrian, and the UK mint were either completely shut down for the remainder of the year or back ordered anywhere as long as 12 to 20 weeks. Yeah. And so what was interesting about it is that when the market finally came back online, and it would have been mid-November, or I take that back, somewhere in the area of November. So there was about 2 months left in the year. We had, if I'm not mistaken, $9 silver, and the best you could find in silver anywhere in the country, anywhere in the industry, was $17 to $18. You were paying 100% premium after what was at least a couple month hiatus and really being able to get anything, as everything just vaporized and disappeared. But you'd pay 100% premium and then be told you had to wait eight weeks to get it and had to pay in full upfront. Same thing was true with gold. So what you saw was a paper price non-reflective of the real price of physical metal, and that premium was pretty much commensurate with the physical drop, with the drop in the spot price. The premium was commensurate with it, along with 8-week delivery delays.
See, and that's the thing that we've talked about this, harped on it for the last few months. Buyers, speculators only buy when things are going up. They don't buy when things are going down. Investors, the opposite. They buy when things are of value, and then they sell it to the speculators on the way up. And precious metals are no different. We see huge amounts of buying when prices are going up. When prices are down, those buyers are scared. And it's interesting because we've seen premiums explode. And like you said, back in 2008, when this is happening, it's hard to stay in business when you have nothing to sell. And that's what's happening right now. It's becoming very hard to get a hold of things. And as a matter of fact, a lot of times you could sell back to the online dealers for more than the spot price because they need to get it. And that's why these premiums are so astronomical, because they're having a hard time, right? That's what's going on with you.
Yeah, just 99% of everything we sell carries a massive premium. If you would have bought Silver Eagles from me in November 2019, you would have paid $339 over. I would have bought them back for $265 over. 4 months later, I would have paid you $11 over to buy those same Silver Eagles. And right now, Silver Eagles, I'm not looking at my sheet, but I think it's north of $7 or $8 over the price of silver. I will pay people to buy their Silver Eagles. Yep. Everything that we buy back from the public these days carries a premium above spot. And so, you know, I think that this is emblematic of the fact that getting product is very, very difficult these days. You know, I've been saying this for a long time. I think certain people think I'm just trying to talk my book. What I'm simply saying is that I'm looking, you know, when you ski, you're supposed to never look at the tips of your skis. You're supposed to look 10, 12 yards ahead. And that's what I'm doing. I'm looking 10, 12 yards ahead, because when people wake up, you know, Rick Rule talked about the other day, 1/2 of 1% of this country owns any precious metals, 1/2 of 1%. So that's nothing. Yeah. So, you know, if you talk about a 5% allocation, when it becomes obvious that things are going in the wrong direction, you need metal, that's a tenfold increase in demand. And that's really 5% allocation. What's that? That's nothing. So anyways, all I'm simply saying is this. I see a time, because in all my career, which has been 33 years, getting product has never been an issue. Getting clients has been a bigger concern. Now I'm less concerned about getting clients and far more concerned about getting product. That's something I'm not used to. And if you all of a sudden flip the switch so that the public, not the people you and I have been talking to for years, but the public says, oh my goodness, I need to do something. Yeah. If they just allocate 5% of their portfolio to precious metals, it's over. You won't find anything. And getting product is without question the single biggest challenge that we face, and everyone in this industry in my position faces as a precious metals.
And by the way, let me say, I have a really good friend that works with Andy, a broker for Miles Franklin. I'm going to put the link to them in the description below. I've known her for a very long time. I'll just say that. But no, and Andy, I want to thank you for coming on, because we've got just a few more minutes. You're jumping on a plane. I'm super pumped for where you're going and hanging out. And I want to thank you for coming on this show. You know, it's interesting, the people that we meet, and I want to close in this, the people I met on this channel, and not only people like you, Rick Rule, all these awesome, amazing investors, but like the people that are subscribed to this channel are amazing human beings. And it's great. It's great because in the time of turmoil and distress, you find out who your real friends are and who your real family is, right? And I want to thank people like you and my subscribers, because as we just hit that 200,000 mark, and I'm still blown away, I have more hope for this world and this economy now than I did before when I started to prepare for this. And I don't know, how do you feel? Like, if you've been in the market for 33 years, you know, in precious metals, you've met a lot of people. Like, what are some things that are standing out right now with you as far as personalities or people, the way they're thinking or what they're doing?
Well, you know, I think that there's a universal concern. There's a universal concern. And you know, sometimes it's hard for guys like you and I who are immersed in this. And you're I don't even know how to explain you, Travis, other than to say you're someone who gets it, and you're someone who gets it and is able to explain it, which is not easy to understand in a way that people can understand. You know, you listen to some economists, you listen to the Fed speak, and you, after listening to 10 minutes of the Federal Reserve talk about Jerome Powell, you're like, what the hell did he just say? But when you listen to you say things that are easy to understand. But I think in general, the public out there is concerned, and maybe they can't quite even articulate it, but I think that there's still confidence that the system the Fed will find a way to engineer a soft landing, that everything is going to be okay. that concern isn't really reached a level yet where people are acting upon it in large numbers. And so I guess what I'm trying to say is that the people that we talk to and have been talking to for a long time are prepared, and they're getting prepared. My biggest concern is that a lot of the people I talk to understand it, and or on my day-to-day, they understand something's wrong. They see how much more expensive it is to go to the grocery store or to do things, but they don't know what to do yet. And I don't think we've quite crossed that line yet where people are panicking and moving into something. So I don't think we've experienced yet what I think is coming in store for us. And what's coming in store for us, I think, is an awakening, a mass awakening. A lot of us and the people who listen, the 200,000 people who listen to, have already been awoken. And, you know, for any of us who are awoken, trying to tell a friend or a family member what's coming is very difficult. It's met with resistance. Yeah. I think we're going to reach a point where people start to change the way that they look at things, and I hope that they do. And I have great hope that we're able to turn this ship around and you know and find meaningful change. I hope so. I really do hope so, because in general, yet I still think that we're the minority, and I don't think that people out there yet quite get it, but I think where we're heading, they're going to get it.
Well, and I'm glad you said minority, because that's where I want to be as an investor. I want to be the contrarian. I want to be seeing the cycles ahead. Like I saw Walmart's earnings were going to come out poorly. I want to be positioned in precious metals before the world wakes up, just like every other cycle before this, and went, whoa, they're printing too much money. I better go buy some gold and watch what happens with the price. So I'm excited.
I want to say one other thing, Travis, and I know we're both in a hurry here, but I want to say one thing. You were the person who opened my eyes to the Saudi Arabian deal with Russia. You're the first one to talk about it online. And I think this is a really, really big deal, because, you know, when you first brought it up, it was just a joint military cooperation agreement. Yeah. And now you look at what's going on with Nigeria and Saudi Arabia actually pledging to sell oil for yuan. The things that you've been talking about, the Belt Road Initiative, the things that you've been talking about are really, really, really very important, coming to a head, because I think if these things happen, if we see the dollar start to be usurped for settlement globally in oil, the things that you've been talking about are going to happen like that. And if you are positioned properly, you know, gold isn't just to protect you from a catastrophe. It's also to help you take advantage of an opportunity. And that's something I know that's very important to you. And there will be a lot of opportunities out there for people who have positioned themselves outside of harm's way. So I think a lot of us, myself included, owe you a debt of gratitude for spending the time that you do, seeing the things that you see, and being able to convey it to the public, myself included.
Thank you. Well, now you can add Iran to the list. You can, Iran's now on the list, now doing deals with China in their own currencies. I mean, this is getting very serious.
Well, since 1974, the dollar has been the exclusive settlement currency for energy. The fact that it is not any longer is the beginning. And this is why what you are saying is so vitally important for people to listen to. I really hope people will listen to what you're saying, because the door's been open, and in all of our lifetimes, it's been shut closed, and it's only been US dollars. And the fact that it's not any longer, when those dollars come home, it creates wicked inflation. But more importantly, we see interest rates spike. And God forbid that happens in the environment we find ourselves in. I think what you are saying to people has never been more important. So from one person, one friend to another, you have my respect and gratitude. And I only hope more people jump on board, and those numbers are 300,000 by the next time we chat.
I can't wait. That'll be awesome. Well, hey, thanks again, Andy. I so appreciate you coming on. I can't wait to see the summer. And man, I hope you have fun this next week.
Thanks, bud. Appreciate it.
All right. Well, hey guys, I appreciate y'all for coming on. I'm going to put the link below to my friend that works for Andy. I trust her very much, and she knows a lot about the metals, and hit her up in the description below. All right, guys, that being said, the Economic Ninja is out.